All right, guys. In this episode, we're going to learn about additional pillars of income in your business. Our guest today is Chris Tamm. He's a founder of multiple businesses, has a lot of expertise in the mortgage and title and insurance space. We're going to teach you how to set all that up, and we're going to talk about the market, what's going on from someone who knows. Stay tuned. Welcome to the Agent Bridge podcast. We're your hosts, Brandon Baca.
And I'm Marl Hessen.
The Agent Bridge is the proven path to real estate success without the burnout. All right. Well, I'm excited today to welcome our guest, Chris Tamm. Chris is founder of Ownership Insurance, Ownership Mortgage, Ownership Financial, and some other stuff, I believe, Chris.
Yeah.
All kinds of businesses. And you've been around this business for a long time, but I think you have a really inspiring story. So if you could, at the beginning of this meeting, I'd love to hear about, you know, your journey in real estate and what got you to where you are today. So would you share a little bit about that with us today?
Yeah, absolutely. And thank you both. Very thankful to be a guest and share anything that could help any of your viewers, subscribers. So my story goes back to kind of, let's say if we rewind to like high school days almost. I'm a high school dropout that went through my own version of challenges. I know we all have our own version of that. And I was a late bloomer going to college. And so I went to college when I was 25 and then fell in love with business. And so ended up getting a master's degree and then got into residential real estate in about 2009, 2010. Residential real estate it became a very quickly, a passion, a love of, you had a couple million entrepreneurs in one place, all fighting to work together. But it's such a large industry. It's not a scarcity mindset most of the time. Like we want to help each other because there's so many transactions out there and so much benefit and it's so complex. And so kind of that journey was getting into residential real estate very quickly, just duplicating systems and figuring out what works, what's duplicatable and trackable. And so we like laser focused on a couple ways of doing business. When I got in within the first year, we were the number one team in one of the top brokerages in Denver, had about 60 listings on the board. And very quickly over the next couple of years, decided to just keep growing the team and just focus on the things that were repeatable and fast cycling through every decision we made. So making a decision, tracking it very heavily, cutting it off when we needed to, leveraging other ones, and really focusing on the systems and the processes. My background came from more of corporate America, building systems and CRMs and sales processes. And so that and residential real estate worked really well. Within 3 years, we were selling over 400 homes a year with 10 agents and 9 support staff.
Oh, wow.
And we were starting to look at additional pillars of income. We were starting to hear about these, and it was new to me at the time because it was my first few years in the business, but learning about title joint ventures and mortgage joint ventures. And so some of the first things I did when I was in the real estate space was we coordinated a title joint venture with a large number of real estate teams here in Denver to get that minimum transaction volume we needed to be profitable right away. And that was great to work with the service level of a vendor you had influence with and could directly affect the transaction with your customer, figure out how to grow. From there, I built a system that ran all of our transactions and tracked all of our data because we couldn't find one on the market that was fit really what we needed to. And maybe there's a little bit of over engineering there. I mean, we could have used something instead, spent the time to build it. But it turned out to be a good decision. We had a lot of real estate teams that asked to use the software because of what it did and the analytics and the recommendations. Instead of just holding information, it told you what you needed to do next. And so in 2014, I sold what I had in the real estate space, and I was the founder and CEO of FirePoint Solutions. We grew that over the next 4 years, and that was rapid growth. We were growing 300 to 700% every year, year over year.
Goodness gracious. That's a dizzying pace to keep up with, I would imagine, the operational side.
Yeah. And it was a tremendous amount of learning. And that's where I think we've all seen to grow anything. It's the team. We can only do a small part of coordinating, but going through that number of changes and adjustments and the scaling piece in the corporate space, there's the common adage that, hey, if you're growing at 10% a year, you're going to double every 7 years. And so every 7 years, usually you go through about 100% turnover from attrition and hiring and changes in structure. And when you compress that 100% growth into every 1 to 3 months, you're putting people through a lot of changes with system and structure. And so that was a great learning experience. I hate to think of my past as a learning experience because I hate to think of the pain I put other people through when I was learning.
Mm-hmm.
Uh, but FirePoint was great to work so close with 800 some real estate teams and brokerages during those couple of years to build what they were looking for and what would fix the problems in their life. And that was a unique way to approach it. And then it got to a point where I'd had a business model previously, which was a little too aggressive, but we had wanted to start mortgage, insurance, title, CRM, digital marketing, and do all these services for agents and let them have ownership because I found I was a good operator and I loved supporting real estate agents. And so it was figure out what is the next pain point? How can we solve it? And so 2017, I resigned from FirePoint and it was a great C-suite there and great leadership that continued to carry it forward and got into starting these businesses. And so in 17, we started the path of 3 more businesses rolling out. And so one of them is a digital marketing and AI and automation firm, Cast Services.
Mm-hmm.
That now does website SEO and then AI, robotic process automation, machine learning, and conversions for companies across different industries. So everything from employer benefits, healthcare, concierge clinics, mortgage, insurance, real estate. And we were doing this a couple of years ago before the buzz of Chat GPT and it becoming more public today. So it's really
Yeah.
interesting to see that dynamic.
Yeah.
Um, and that came from us building that into our businesses and wanting to use it in all of our businesses. And we've used that and currently do today in the operating businesses that we run. And then my time has gone into mainly the last 5 years into ownership financial, which is ownership mortgage, ownership insurance. And that's been, again, very aggressive growth. I have hundreds of business partners in the real estate space who are agents, brokerage owners, coaches, team leaders. And so growing a business where we're responsible and accountable to hundreds of other organizations, it's
Right.
a unique way to grow that we do have our product, but we're growing alongside and delivering what people are asking for, not just selling a product and doing more marketing with it.
Right. Right.
Um, and then even the last couple of years, we just had, as I say, as a group, we have a very strong operating team that helps operate the different businesses. And some we have majority stake and some we have minority stake, just depends on the situation and how things have gone over the years. But we just had 2 more companies roll out that our operating team helps manage. And those came from customers coming to us and saying, hey, you've done these well. Could you help us with this project? And very few and select ones that we would take on. But
Right.
when it's something that fits in our wheelhouse of what we're already doing and our partners are a lot of times already paying us to do these things or build the services for them,
Mm-hmm.
sometimes it's very easy to roll out another business since we've had that kind of repetitive success of rolling them out and getting them to strong recurring revenue. But then also side of being an operator, we can do a lot of these things internally. We can build the web, we can do the SEO, we can do all the financial tracking and metrics and systems. So lots of words there, but I fall in love with, it's the real estate space, it's the entrepreneur serving the agent, and then it's entrepreneurship in general, the leadership, the growth, the pressure, the shareholders.
Yeah.
Yeah, love the process.
Yeah. It sounds like you're a serial entrepreneur.
I think so. I think I'm more of a starter and a mid-level.
Yeah.
I think when it gets to the point where it's boring and we can't make any more changes to help people, at that point is where I don't find that same joy anymore because we're not changing the world anymore. We're just repeating what we
Right.
did yesterday.
Yeah. I like
Yeah,
that a
it
lot.
becomes growth for the sake of growth and just making more money. It's not really about helping people. I think it gets to that point.
Yeah. Totally.
Yeah, I think we can all make money, and I don't have the goal of I need to have a tremendous amount of money. I like money, but it's a tool and I want to do things I enjoy with great people.
Yeah. That's
Yep.
great. So I'm curious to hear those. So you've got this, uh, massive like background in just general the real estate space. Like you have expertise in mortgage and insurance, and it sounds like you ran a very successful team. So I'm just curious where you see real estate today, like March, whatever was the 22nd,
22nd.
March
I hope so. Yeah.
22nd, 2023. Yeah. So it's like where you see it today, and then where you see just generally like real estate going in the next 3 to 5 years, because there's just been a lot of changes, and it's hard really as like a as a broker owner or as a realtor or as a team leader to know how to decipher what I should give my attention to, because there's just a lot of noise, and it's like, okay, well, what direction is this going in, so I want to be adaptable. I want to be um I want to change where we need to, but I don't want to go down roads that are going to waste my time.
Yeah. Yeah. It's an interesting question. It's a broad one.
Yeah, it
Um,
is.
I think so personally, again, just strong opinions,
Yeah.
but I see a couple different things that are changing. And when we think about, and I'll use that chat GPT as an example, I think that's a tidal wave that is just now hitting the shore. But years ago in the corporate space, that was being used, it was being leveraged. And it's just now people are kind of waking up and saying, oh my gosh, this is here. Well, it's been here for quite a while. It's just
Yes.
now we're seeing it get past Fortune 500 and get to everyday user. In the real estate space, I think it's the same thing. And there's a couple different tidal waves that I think have been building and are changing the way the market operates. And again, I think at the end of the day, it's going to be the agent, the consumer that make the final choice as far as where it goes.
Yeah.
And a lot of people have been riding the waves of what maybe the larger companies, the tech companies, these big shifts have been creating. I think one piece of it is it goes back to the belly to belly personal, the relationship, that the relationship you have with your agents is more powerful than some large scaled companies offering if you have relationship with them, because you can talk to them, you can diagnose what's actually best.
Right.
And there's some people that just want to plug into a scalable environment, and that's fine. That's their choice. Everybody has a choice of where they want to be. So I think the personal piece continues and actually gets bigger because there's a lot of fear in the market. Whenever there's excitement and change, some people latch onto the fear, some people latch onto the opportunity. There's so much change happening because of, I mean, technology, consolidation. When you think that today versus 10 years ago, 10 years ago, Zillow and didn't have 80% of searchers searching at some point on their platform.
Yeah.
And again, just picking on one little thing. So different environment. I think the personal piece is very important. I think the second one, tech is changing in a way that it hasn't changed before. This isn't a repeat of the .com. This isn't a repeat of Facebook or social media. This is something very different where everyday person that doesn't have to have a tech degree or an engineering degree just got a 10x or a 20x leverage on everyday tasks. And they just stopped having to pay for many types of services that yesterday or the week or the month before they had to pay for.
Yeah.
And so that I think is going to, those ripples are going to go for the next years, even from just what ChatGPT did. And then when you take what Midjourney and some of these other automation tools that are about to come out, and going even further, if you look at South Korea right now, they are the world leader in digital humans, using real lifelike, even complete scans of people to talk to you in different ways than we're seeing today. When you think about psychologically, like, do you want a clone of you, or do you want a clone of you that's poking fun at you and building its own relationship with the user so you can be yourself and it can be itself? And these are things that have been proved out for years, but they're just dripping into America now.
Yeah.
And so some of those change service industries in large ways in other countries, and I think they'll spill over here. And then the last, I think, large one, again, there's probably 100 we could go through in different ways to approach this, but is the ownership idea that today, because of technology and things getting less expensive and just the continued fine tuning of this industry, where the opportunities are, there's a desire for a lot of people to have something longer term to work with. And so whether it's things like we're going to talk about today, like these additional pillars of income, that is entrepreneurship at its heart. How do you find ways to incorporate things that benefit your consumer and your team better? And when you do these the right way, they can definitely solve that. And then even ownership when it comes to where am I going to be? Do I real estate? You see some people that are moving brokerages every 3 years and they're not really gaining anything from it, except they want something fresh. And then you see people that dig deep, like with your team, where they dig deep and they just continue to build on their 10-year path. And that relationship and accountability is what helps them be successful long term. Right. And so that piece of ownership, whether it is an additional pillar of income or just owning, hey, I'm going to dive deep here for the next 5 years, or I'm going to join somebody that really gives the support and helps me continue to grow. That conversation is changing. I think it's neat to see what people come up with. Sometimes it's frustrating to see all the rehashes of, 20 new companies rolled out with the same program. They just named it something different. But to me, that all goes back to the relationship, because when you're filtering through so much noise, and that noise is going to get so much louder now that things can develop faster, roll out faster, I think it still goes back to that personal relationship. That's how we find our way through the noise.
Yeah, I think, and it's interesting, when you think about it, you look at back in real estate in the last 10 years or 10 years ago or 15 years ago, people had a lot more, they identified with the brand a lot more. it's like, well, if I were Century 21 and I got my gold jacket, or I'm with this brand or that brand or whatever, I'm seeing, for better or for worse, I mean, people basically are looking to build their own brand and looking for like key relationships that are going to help them develop that as a business owner. So I think that that has changed. And I think I mean, ultimately it's going to be a good thing. And we'll find balance in real estate space for all of that. But yeah, it's interesting how that key piece has changed, where people are not necessarily going for a brand; they're going for who can help me build this.
Can I ask you a question on that for your thoughts?
What's that?
So I guess question for you or for
Yeah,
both of you,
yeah.
your
Yep.
thoughts on that. Do you think that's affected by, if you think 20 years ago, if we think before like social media, it was really expensive to build and reinforce a brand. And those have a tail of, say, 3 to 7 years or however long it is. That's why
Yep.
somebody changes the logo or does a refresh.
Right.
Whereas now it's so much easier to target people on social media or to stay in touch with your sphere or to build that now people's focuses are changing to now I can kind of not own my audience because you don't own your audience, but I can deliver value directly to my audience.
Yeah.
And I don't necessarily need to distract them with a larger brand that doesn't benefit me long term. Or do you see it a
Right.
different way?
I do definitely see it that way. I think that I don't know that they're seeing the brand necessarily as a distraction. I think that's basically like reinforcing that their legitimacy, or it can reinforce their legitimacy, but they don't necessarily need it. As a matter of fact, one of the things that we sort of have to reinforce just from a state perspective is like how big the logo is on signs, things like that,
Yeah.
right? Because they're wanting to put, real estate agents want to put their name sort of front and center, and they want to sort of bury a logo, potentially want to bury a logo. Sometimes people are fine with it and love it. But you see all of these like powered by. That's been a new sort of thing that's come out in the last 5 years. It's like powered by a particular brand. So they're building their own thing, but it's powered by. So it's like what am I getting from a key relationship perspective? What am I getting from an operations perspective? Like, obviously, probably a lot of real estate agents or team leaders or even broker owners don't want to necessarily be doing like a lot of the heavy operational load that it requires. I mean, it's the operations piece for real estate brokerages is heavy, from compliance to finance to all of those things. It can be pretty hard. So I think they want to sort of offload those things and do what they do best, but they are also wanting to sort of reinforce their brand.
Yeah. And I think the social media piece is also what's caused people to move brokerages so often because they see the best version of someone, what they want you to see through social media. And so they say they always think the grass is greener, right? So they say, well, Brandon over there is crushing it. He must be selling, $1 billion worth of real estate a year. Look at all those posts. And then, they go over and do what Brandon's doing and realize, well, maybe it's not a lot different than what I'm doing here at my own brokerage.
Yeah. Yeah, so it's
That's
just that,
interesting.
yeah, it's just kind of finding like I do think if that real estate agent has that key relationship that they can help and stick with it, like you said, stick with it, dig deeper, take ownership, um, they're going to get further than if they're moving around a lot.
So another question there, do you see the industry changing? And since my history in this industry is kind of like last, say 13, 14 years, it's not 20, it's not 30, 40. There are many people have a lot more experience and have seen more things in the industry. But with that, do you see a change in how coaches and leaders and influencers are sharing information today versus maybe 10, 15 years ago? Because even this, the amount of information that you share just to help people, I didn't see, maybe I wasn't looking in the right place, but I didn't see as many outlets like this 10 years ago or
Right.
when I first got in, say 14 years ago. Have you seen that change?
Without question, that's probably been the biggest change, I think, is how willing people are to share information or sort of follow that like Gary Vaynerchuk model, which is like, hey, just be out there with the information. And basically people are going to engage with the relationship versus the information. Because what you used to do is like hold on to all of the information. I'm not going to give this to anybody. So you had sort of this scarcity mindset. And now I'm seeing, if you look at, key influential people, they are sharing how things get done. Like, how do you sell houses? How do you, another guy that, like Ricky Caruth, like he'll do for somebody on our calls live,
Yeah.
right? And be like, hey, this is how you do them, and this is how the conversation goes. Where used to you had to sort of like, oh, well, you've got to kind of buy,
Yeah.
buy the brokerage or buy the relationship before I'm going to help
Yeah.
you.
They literally draw you in from a place of abundance. Like they're
Right.
giving, 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 and then draw you in.
That's exactly right. So yeah, that's been a big change. And I think that um, brokerages do need to sort of shift their mindset. If they're not doing that, they need to shift their mindset towards, hey, look, you need to have the mindset of abundance. You need to have this. So, for instance, where you're speaking next week at our 10 Oaks Summit, um, everybody's invited. It doesn't have to be just for 10 Oaks agents. We're inviting agents from all over. And also we're collaborating with broker owners from other companies.
Yeah.
So I think that collaboration and information share is definitely new, but I think it's a great thing.
Interesting. Yeah, I very much agree on the great thing. When it comes to, for me, there's a kind of parlay there into like the changing things in the tech world, and change things in the tech world, then change what happens in the finance world, which directly affects like what I do day to day and like mortgage and insurance and different things. And so we're always looking at how is this adjusting things, even in that world, and with the real estate agents and how our partners and customers work together, all those things. It's accelerating so much more when people are sharing openly. And it, again, I keep tying it back to, because it is such maybe a big topic news wise, but the tools that people are developing in the tech world, and even the models that people are developing, and like what you're sharing in the real estate space, when it's freely out there and everybody can noodle on it and put it together differently, and it's so freely available. I mean, today I could go watch 20 of your podcasts and take all that information in and maybe come up with a new idea and go execute it. I mean, it's allowing things to change faster. I think that goes back to that personal piece. Arlo, you said it, as far as it goes back to the relationship, that if they like who you are and you're willing to continue serving them and helping them, that's what most people are looking for, is somebody to stick with and somebody to continue puzzling through these things with. And I think, Brandon, you said it also, if people aren't doing that, if brokers aren't doing that, there's a gap, there's a hole there, and people are looking for somebody to help them navigate all this.
Yeah.
Absolutely. Well, and with social media, they're like, every brokerage, you can find out exactly what they're doing and what their splits are and what their caps are and all this. And so there has to be a differentiator, and that is your information sharing or your mentorship or what you have available that some other brokerage doesn't. So I think that's really what really sets the great brokers or brokerages apart from just the average ones.
Yeah, absolutely. The other thing that you have to know, I think, as you're sharing the information, is there are going to be people take advantage of it. There are so many people that don't. It's like you don't really have anything to like, I think the sort of idea is like the reason you don't want to share information is because that person's going to become your competitor. Well, okay, yes, there's potential for that, but the majority of people are not going to do the work necessary to create that, frankly.
Yeah.
So you can be comfortable. It's one of the things, like even in our company, because we do masterminds every month, and our experienced agents teach our new agents how to do what they've done. Okay. Yeah. Well, that's new, right? Because a lot of times agents, they don't want to be like, I don't want to tell this person what I did in this neighborhood to get all these clients, because now they're going to become my competitor. Well, that's scarcity. Right?
Yeah.
But contribution and abundance is your fastest way to success. So it's like, actually, when you share that information, when you're putting yourself in that place of contribution and abundance, that's going to increase your influence, and it's going to ultimately end up in more success for you.
Yep.
When you think, so ways I've thought about that in the past, there have been like seasons in me hopefully growing as a leader or entrepreneur and how we work with our teams and shareholders. One of those pieces was I've had seasons in the past where I was much more white knuckled, don't share, and afraid of that competition. But then I've seen the other side, which came with pain. And a lot of people, say growth comes through pain. That's what we're really looking at. How do we grow? How do we change? But sharing something, and then what if it does turn into a competitor? Mm-hmm. For me, I've seen competitors push me to do better and deliver more value, which is how we serve agents and serve the consumer better. And so even though I may not like having a competitor because I shared something, that being comfortable a lot of times is dangerous, because we're not seeing what we can do better without somebody chasing us, or that lion chasing us about to bite our tail.
Yeah, that's a great way to look at it.
And I think that's the way the best entrepreneurs look at it, because honestly, if you're not growing, you're dying. Everybody says that, right? Mm-hmm. So you just sit there on the fence in real estate, not changing, then you're going to wake up one day and the real estate's done differently. And
that's why it's what reminds me of like Shark Tank, you know, when Mark Cuban, he always got just furious with people when they were like, would license something or basically like, you know, patent something so nobody else could get it. He would get
Yeah.
furious with them.
It's like, just get it out there, get it distributed. Yeah.
Yeah, exactly. So anyway, well, let's talk about the additional pillars of income because that's something that's also changed. I do see that, you know, I have seen this increase, especially in the last 3 years, where, you know, realtors are starting to take or offer or, you know, decrease commissions. Sometimes to get listings, or sometimes, you know, offering on the buy side because house prices have gone up so much. So sometimes homeowners are like, I don't want to pay 3% on this. How can I pay 2% or 2.5%? The reality of it is realtors will still sell the houses.
Yeah.
And so that's changing. And so um, there's just a lot of change in sort of compensation and real estate. And so I would love to talk about additional pillars of income and what you guys bring to the table and what the opportunity is for real estate agents.
Yeah. There's obviously lots of things that we can cover there. I try and make sure that whenever I'm talking about it, it's purely informational on what are the options out there, what are their risks, what does it look like integrating in your business.
Yeah.
And what we built is very specific for what some very specific business operators are looking for in a relationship. And so what we've seen, I talk a lot about real estate team because there's some standardization in how teams run. Again, some individual agents can run things very differently. Obviously, brokerages can run very differently. Teams as a business unit of like 2 people to, you know, these mega ones of hundreds. We saw a couple of years ago, their profit margins on average were like 3 to at the high end 15%. And so that's starting to get closer to a commoditized profit margin. Whereas you think of software professional services, they need to hold 40 to 90% margin because they spend so much on the front end to deliver. There's so much variability in what they can bill. So in a business that's not pure recurring revenue, to have profit margins in that range is super risky because you get a 10% down year. Yeah. And so what we've seen is a lot of people diving into either how do you do more volume, which has its own risks to try and build that profit margin up, or how do you get into these additional pillars of income? And they go back pre-RESPA, I mean, pre the 1970s, where these partnerships, they initially started with like the large brokerages and the large organizations because they were so expensive to maintain and to just have the operations.
Oh, yeah.
We've seen over time, the cost to close a loan, depending on where you look, has as a whole in the mortgage market, it looks like it's gone up if you just look at how people are paid. But you look at the operations, it's gotten more efficient in a lot of areas. The fact that a lot of underwriting or parts of processing today can be done by AI or machines reading documents, things that don't take away the human decision and the human relationship with the customer, but it leverages the busy work. And so as things get less expensive, these partnerships are getting less expensive to get into. You don't have to spend $1.5 million anymore to get in compliantly into the mortgage space and to make money and deliver a great product, turn time, and rates to the customer. And so in that, there's a lot of options. Like if we talk through the options, if somebody wanted to get into, let's say, mortgage insurance or title insurance, there's joint ventures where you would start up a third-party company in partnership with another company in the space. You would go get your license and start your own and do the entire piece and run the operations and keep all the money. You can buy into other companies where they already have operations that are going. And then there's a lot of kind of, I would say, less standard that bear their own risks. I mean, I've heard of companies that say, hey, come be an unlicensed branch manager for us and just get paid on transactions. That to me is much riskier from a RESPA standpoint. Again, I'm not a RESPA attorney. And so if anybody wants to debate that, we can debate as non-attorneys.
Right.
And then you have a lot traditionally in the industry, you've seen lead purchase agreements and marketing service agreements where people are buying exposure and trying to value that exposure. I think what we've seen and what the impetus for us building what we built was that those lead purchase agreements and the marketing service agreements are very much up to the company, the legal climate, and the value of that marketing. And if marketing clicks on a website were worth $2 a year before, and now they're worth 10 cents, a marketing service agreement has to adjust what's being paid because the value is less or the value is more. And so from a business owner perspective, what we've seen is most people that want to be in the business long-term, 5 or more years, that want to build an asset that's either transferable or sellable, they want to be in some sort of ownership. And they want to know that if I help you grow your business, that I get a piece of that upside.
Right.
Whereas some of these other ones, they're temporary relationships where I help you grow, you help me offset some costs. But we have a lot of partners that come to us and say, well, hey, the bank I was working with or the loan officer I was working with, their employer just cut off their lead spend or cut off their marketing service arrangements. And now you're stuck figuring that out very quickly with potentially a slim profit margin.
Yeah, it can be super challenging on an MSA where, yeah, if they go, hey, guess what? You're out. Yeah, you're just stuck with a, depending on what your lead spend was or what your marketing spend was, you're looking at a $5,000 to $10,000 bill now that you didn't have the month before.
Yep.
And you have zero control over it. So yeah, that can be, it can be, it's not to say that it hasn't worked, but I like that there's a better way to do it.
Yeah. And the building long term, what we've seen is it has its very unique challenges. I mean, having hundreds of shareholders and working through all this stuff, it's definitely not for the faint of heart if you want to do it yourself. Like if you want to go start a business and partner with a bunch of real estate agents and have them buy in, there's a lot of technicalities there, from licensing, bonding, securities, all these different things. So what we decided to do is we decided to go through and put all that together over years and then pressure test it with teams, brokerages, and agents across the country to make sure it was truly delivering a better value for them and a better value for the customer. So I think there's also a danger in these additional pillars of income that if your focus is not on how to benefit the consumer more, then it becomes just a money-making tool. And that gets dangerous because, first of all, it's a financially regulated industry where you have to show it's benefiting the consumer. And secondly, we're dealing with, in our world, partners that are real estate agents. And the only reason they want to partner with us is to know they're giving a better service level to their client and that they're an owner long-term for what they can do and what we can build together. And if we ever take our eye off of the consumer, we lose all credibility, as we should, because this is a consumer-facing business.
Yeah, and I think that's one of the things that, real estate agents or broker owners or team leaders are most wary of getting into this is, the sort of idea is like, hey, am I pointing my clients in the right direction, or is this going to feel like a, what's the word I'm looking for? Is it going to feel like inauthentic for me to be like, hey, use my guy? So, or like I'm going to get a kickback or something like that. So I absolutely agree with you that the focus is you need to be partnering with somebody who's going to deliver the better service to the consumer. So yeah, I agree with you.
Well, and I think you've even seen that in your business, right, Chris? Like a lot of agents, that's what they want to do, right? They want to try the loan officer before they undergo any sort of process with them because they want to make sure, hey, is this going to work? Because you have skin in the game as an agent, whether or not that loan officer is delivering a good product or service to that client. So, it's very important to them. We've seen that.
Yeah. So we've definitely seen that. And it leads into, I think, another point right after this, which is a great segue. We've definitely seen that in the real estate space, like most service industries, there's too few transactions. They can be large commissions, but there's so much energy and time that goes into each one. This isn't a $29 shoe sale where the wrong coupon code maybe or maybe not disrupts one sale. This is a transaction critical relationship with a lot of money and time and stress and energy on the line. And so even the way that we build our service over the years, we found that white glove, belly to belly, personal relationship. It can't feel like a call center. It can't feel like, hey, when I call you, I have 3 minutes to deal with this. You better know what I'm talking about. It can't be a random person saying, oh, let me take 10 minutes and read your file. It doesn't work. And so even that service level to be focused on the customer and how we grow. So I've found it very valuable, very challenging, but also very valuable to work with our partners and our shareholders and even just the agents and customers we work with that aren't shareholders around exactly what do we have to build? Where are the pieces that might be super micro that nobody else asks you, but we have to know what those are to be on the cutting edge and make sure we're fighting the next fight, not just copying what other people are doing today. Another piece, Aro, kind of from what you said, one of the concepts we deal with in this additional pillars of income world, I think is really important. And I don't hear it talked about very much when people talk about RESPA or talk about compliant income in this space. And RESPA is a super charged topic, depending on who I'm talking to, but it's a super helpful piece of legislation. It outlines exactly what you need to do to be compliant. It tells you, and you can read the case law of exactly what happened for people that were non-compliant.
Right.
And so that makes it fairly easy to say, okay, we're just going to do all of those things. And RESPA has this idea of if I introduce a consumer to you, it's either a referral or a lead. And that's based on how you introduce them. That like leads under RESPA for lead purchase would be, I am selling my vendor a list of the leads that come in each month, but I'm not telling them a thing about that vendor. I'm not telling the consumer, I like this person, I've used them, I value them, I trust them. So no positive affirmation. So that could fit under a lead purchase agreement or different things under RESPA that are called leads. But as soon as you say something affirmatively about that vendor, I've used this person, which generates trust. I like them, which says, oh, I might like them also. You're saying something that now stacks them in the consumer's mind above somebody else. Now under RESPA, that's considered a referral. And
Right.
to be able to make any money on that, now you have to follow all these different rules. You have to be an owner with capital at risk and have a vote or some way of influencing and disclose from an affiliated business arrangement disclosure. And I'm not trying to say that as far as like it's scary. It's just those are the things that you do. And that's where we focus on. There's a way to make money in this industry alongside the other owners, but you've got to do it in the way that RESPA says, and you have to make sure the consumer always knows and is making their choice.
Yeah, I agree with you. It is RESPA is a hot topic. So I'm curious because there's something that you brought to the market, which I think is revolutionary, um, which is this relationship with ownership mortgage. And can you share a little bit about that and that sort of how you worked with RESPA law to bring this to fruition?
Yeah. So there's many ways to comply with RESPA because it states here's all the things that you need to do and here's what the consumer needs to experience and the choice that they have. Where we focused was trying to bring these partnerships down to a smaller size. Now there's a size where it's too small, where it's not even worth it. But the ability of a large company or a small company, I mean, even today, a real estate agent can go out and get their mortgage loan originator license and can become a loan officer. But there's a lot of stuff that they have to deal with, the headache in the middle, the compliance, the personal guarantees, just the time distraction, state audits. I mean, it's a massive list. And so we take all of that. So we do all of that. And we're bringing in people as partners in our business, which also can be a risky thing for us in that we are bringing in a shareholder that now we are accountable to.
Yeah.
But that also generates the trust that we're doing this together. And we've done it together with many, many shareholders over a long time. And we've done that successfully by working with our partners. And so in doing that, breaking it down to a smaller level, we really focus on a lot of different pieces, but helping our partners and just any agent that works with understand the nuance of, even if you want to work with ownership mortgage, how do you market that in a RESPA compliant way? How do you do that in an email campaign? How do you do that on a website where it's still compliant? How do you walk agents through these and make it turnkey for them where they don't necessarily have to be afraid of it? They understand what it does. They understand how they can implement it and track it. And that's been a great process because it's an eye opener for a lot of people. It points at the larger brokers and says, oh, that's why they've been doing it that way for 40 years. Or that's why I've always had to sign that affiliate or present my client that affiliate business arrangement with disclosure, even though my clients are never using that title company or whatever that story is that our partners are going through.
Mm-hmm.
And then on the income side, it's helping them understand that our relationship with them is no longer, as people think about the industry, it's not we're buying you bagels and donuts, and it's not we're sponsoring something for you, but it's how do we grow together to benefit your customer? And there can be a lot more money on the ownership side if we're very successful.
Right.
At the same time, it's educating our partners. There's no guaranteed return when you're in ownership. This is not, we're not buying your leads. We're not paying you per loan. It can't work that way.
Right.
So we're truly getting exposed to the market. And that's a neat process also because all of our partners then become, in a sense, miniature entrepreneurs in a new space, understanding why that month we didn't make money or why that month costs are a lot higher. And even before we got on here, we were talking about the FOMC meeting and the announcement we're going to have, what's happening with interest rates. We become somebody to not just educate the agents, but educating our business partners. Here's the risks that were coming up and helping them understand why we're making the business decisions we are. Like we just had a vendor that we had to change a relationship with. And we're reaching out and talking to our partners and sending messages out, helping them understand, here's why we're making our business decisions. And so really helping them understand the nuance here, because it's not as simple as, oh, go apply and you're going to make money. There's so many variables on the back end of these businesses.
Right. That's absolutely right.
Yep.
Yeah.
Yeah.
So I think to maybe take a lot of words and maybe boil it back down is helping it be turnkey but also building in enough communication that the trust is there and that we're available to help answer those nuanced questions that people get when all of a sudden they might be an owner now in an insurance brokerage or in a mortgage company. And they want to know a little bit more about what's really going on, not what distribution check am I getting, but why is that check that size?
Right. Yeah, absolutely. Yeah, it's really exciting. I think, bringing something like this to market, for real estate professionals, it's like, okay, look, this is, this level, I think in the same sense, it levels you up as a professional.
Yeah. Well, and I think the most exciting piece of it really is that you've kind of, I wouldn't say always, but for a long time have had partnerships in which a brokerage and a mortgage company are sharing some sort of revenue, whether a joint venture or whatever. But now you're bringing it to the agent.
Yeah.
So the agent really has a way to make a lot more money on these transactions over a long period of time. And they're really the ones directing all the traffic to that particular mortgage loan officer. So I think it's just very exciting that you can actually bring that profit to the agent and not just some large organization.
Yeah, I agree.
Yeah, absolutely. And it's an eye opener. And a lot of our partners, it's funny. I used to work with some of these agents when I was in the business, and they then later on became investors. And some of them came and worked with us to build these businesses because they were so excited about what we're doing. And in some of the eye opening moments, when a 20-year real estate agent that worked with me on our team realized, if I had owned a piece of the insurance brokerage 20 years ago, that would be my check every month right now, or every year right now.
Yeah.
And it was more than he was making in real estate doing transactions. And so things like that, it hasn't always been easy to just go open another business, and the distraction level, there's so many things to manage. But if we can buffer those distractions for them and we can help them understand and fractionalize what they need to do to stay compliant and what we need to do from the operations side, I think you said it really well. It can make them a lot more money over time, depending on if they're willing to adopt and help us grow that service level also. And it also gives them a partner that they know, hey, I'm growing long-term with you. I want to give you the feedback that is so direct that sometimes what we saw in the past, because I've been in these joint ventures and different things, you would see somebody fire a vendor because they didn't want to take the time and the energy to figure it out. And when you're in ownership together, the goal is to figure it out because we can get better. And if we need to have a tough conversation and I just need to listen, that needs to happen, because if we can fix that for you or fix it for anybody else, again, as co-owners, we all do better long-term and the consumer benefits more. So even that alignment of having the tough conversations and having business partners that are willing to give feedback, where in another situation, they might've just walked away. That's priceless to work through those for the consumer.
Yeah, I absolutely agree.
Yeah. And I think another challenge really is that there's a lot of turnover in real estate agents. So real estate agents come in to become agents, they leave. And you really need that longevity to really understand how this can benefit you. Like, yes, you can make money on a loan or you can make money at a title company, but the insurance piece takes a long time to build. So it's just, I think, getting them to understand this is an entrepreneurial play for the long game, not for, making thousands of dollars tomorrow. Then that's where the challenge comes in. I see.
Yeah,
absolutely. Yeah, very much. And it also goes back to what you said, where we have some people that they've already made their decision, they've already been investigating things, they might have a comfort level, they might jump in right away. And we have other people that might want to just pressure test the system and send 1, 2, 3 loans and make sure the service is on point, because it's also can be a tricky decision when somebody has a relationship for 2, 5, 10, 15 years and now has to make a decision between an entrepreneurial practice and just a relationship practice. Do I want to use my previous vendor that I've known and trusted, or do I want to build and give input and trust somebody where I can own a piece of the business and build something else long term? And those are tricky decisions for each person to make themselves.
Yeah, absolutely. So if I'm a real estate agent and I'm listening to this, I'll go, okay, I'm ready to start doing, building those additional pillars of income. What are my next steps?
I think next steps, if they hear this, they've already watched this. And so just getting some familiarity. So if you just heard those last few seconds, watch this entire episode. Yeah. And then my recommendation would be to reach out to the two of you, because you're actually doing it. You're in the business. You've been doing this. You've been through kind of the mind shift of how it operates. You've been in these types of businesses before, and you've understood how some can be better, worse, easier, more challenging to facilitate and what those look like. And then you could always direct them based on where it needs to go. I mean, selfishly, I would say, yes, you have to call us and we're the only option out there, but that's not true. But as far as the option for turnkey and the education, a lot of the other things, and not being like a franchise organization or others, obviously, I think we're the best option. I wouldn't be doing this. But I think reach out to you and have as much of a conversation as you're willing to. But I also know you have resources that we've talked about that you could send them to kind of learn more and figure out what they want to do.
Yeah, absolutely. Yeah, you guys can reach out to us. We'll make sure we've got our information in the show notes for this episode. You know, another thing, you guys, we would love for you to like, subscribe, rate us on whatever podcast that you listen to, or whatever podcast host, whether it's Apple Podcasts or Spotify or whatever. Give us a rating. We really appreciate it. And also comment. We've got some comments last week. It's super helpful, you know, when you guys ask questions and comment, for us to know we're headed in the right direction and what you guys might want to learn about. And then the final thing I'll ask, Chris, is if we could have you come back, because I really would like to pick your brain on, you know, the AI part of this business, right? And what kind of changes are going to happen in real estate as a result of AI, and how our agents, our listeners, can benefit from that as well.
Would love to. And thanks again for the time today. Great conversation.
Yeah. Thanks, Chris. Appreciate you.
You also.
Have a good one. Bye.
You too.